Good day to you traders, my name is Rob and welcome to an analysis video where I'll cover the macro, meso and micro outlook on Bitcoin. Some of you may know me as my title on Twitter and on Telegram as Robo Copo, but my name is Rob, so nice to meet you. And without further ado, let's get started. So first of all, I would like to focus on the macro outlook, pointing out a few key ingredients in order to build an edge uh, and basically decide what to do in this market in general. Yeah, it's all very exciting and stuff with this parabola, but it's important to put it in context and to try and think about it logically and from different angles, from the angles of the big players, the retail traders, the farmers, etc. So first of all, I would like to point out that this entire move, I don't consider it healthy at all. I mean, it's quite substantial. It's 330% price increase. I mean, and when we all look at the numbers, it's very impressive, and but that thinking gets in the way of trying to reason with price and understand where we at in the market and what exactly is going on. Um, so as Bitcoin breaks out over here after its consolidation around 3.2, 4.2K, this move here from 4.2 to 5.3, this was triggered by a single entity that that put in a 100 million buy order across three exchanges. So price starts to rise, and it consolidates with an upward momentum towards the 6K level, which was a substantial support during 2018. So price starts to rise, and traders tend to feel its rising cycle is never going to end about this point. So they build confidence based on hysteria, and this misjudgment provides a blind faith in investors as the chart takes an exponential curve-based structure. And after its consolidation here, where we have market acceptance looking left, obviously, um, the parabola moves vertically as panic buying occurs in an absence of sellers. Exactly what we saw from the move in 2017 from basically 6K to 20K, the last stage of the parabola, in this case and in this case. And most of this climatic buying pressure is driven by momentum and amateur traders or retail traders, whatever you want to call them, in fear to be left behind. And finally, what happens? Reality kicks in, and buyers, wherever they bought, here, whatever, buyers start, the people that have long exposure in the market start taking profits, and this creates panic selling and price reverses. To be perfectly honest, I was expecting a more dramatic correction from the top of 13.7. I should mention I'm on Bitfinex daily chart. Um, and also the people that had long exposure and the people that basically bought the top because they were thinking what we're going straight to all-time highs, 50K, whatever. I mean, this thinking about price itself creates problems, in my opinion. And as a trader, I tend to not focus on price that much as a number, but building confidence based upon methodological thinking and logical approach to understand what is going on exactly, what can I expect before I enter a trade. Basically, building an edge before everyone else, so that you can make profit. Um, and why does price stop here? It's important to understand that as well. After we established that this unsustained move, in my opinion, after we dig into it and basically build a foundation on why is this occurring, I would like to focus on this part of the chart so that we can establish and answer the question, why is price stopping here? So right here, after the last parabolic phase, again, the same that as the same thing that we had here. After the first correction, which was quite impulsive, obviously, I mean, 45%, let's say. Price, for the first time after a 20K rise, prints a lower high on the micro time frame. And usually the first lower high is where institutions or big players, or basically people or a team of people who know what they're doing, they limit or they completely delete their long exposure in the market in this case. The same applies when price is moving down. I mean, we have the first higher low, so short exposure is limited here. Back to the point. So price finds resistance here, and again we can reason with that, because on its way up to 20K, price found resistance at this spot. Why? Well, you had a rise from 1,000 to 20K. You expect people to take profit. We don't have any structure on the left so that you can reason with that. But my point is that price stops here where price found resistance on its way up. That's it. And continues down. Zooming out. And this liquidity level where at first price corrected after 20K is also very significant. As you can see, it's even significant at the current market structure that we are in. So that's why I put it right, so that we can clearly see this level. So price finds support here, finds resistance right over here, and continues down to the first touch of the 6K level, 6K 5.8, which is basically the zone where we consolidated, moved sideways, formed the triangle formation, whatever, during 2018. And a very logical spot where people will be considering to enter the market by opening long positions, by buying on spot, whatever. Why? Because this was the last phase of the parabolic rise, as I said for the third time. But I'm emphasizing on that because this is a zone where there is market acceptance. I mean, it was a resistance, then it pushed up, then retested, and then continued up. So the first place where we would look for a support after this move will be here. And by here I mean this zone between 6K and 5K. And price finds support. And then this impulsive move finds resistance at a liquidity level. where there are wicks, there is liquidity. So price finds resistance here and continues down to another touch of the support. And this pivot is very important in the market, and I will show you why. If we pull a Fibonacci retracement from top to bottom, from the first lower high at 70.2 to 6K, we see that this double top formation aligns with the 50% retracement, Fibonacci retracement, which is a zone, this entire zone here between the 50 and the 6.5 is where the algorithms kick into short. So a very logical spot to be thinking about going into a short position. You see, I build a thesis and I try to defend it. Of course, I know the aftermath about all this, but this exercise helped me develop an approach where I defend. I want to enter the market. I try to find confluence at a level before I consider any exposure. So this aligns with the 50, which is an algorithmic trigger to enter the market. In this case, seeking short exposure. And usually the first target of an algorithm that kicks in at the 50 or 618, this entire zone, as I said, the first target take profit would be the minus 236 level, which we hit almost to the tick. I mean, we go slightly below it. On some exchanges, it's to the tick. But that was my point, that this liquidity level here proved its significance in 2018, and it's important and during 2019 as well. Another important thing, and I will stop talking about the resistance that we have. If we pull a fib from top to bottom, we see that this level here splits the golden zone between the 618 and 6.5 and 65 level, where logically, as we pointed out here, whatever you want to call it, I mean, it's a stiff resistance, and price fell to go above it, to close above it, to close above the 65 level, to close above the 13,000 mark on the daily, of course, which again aligns with a lot of liquidity here. Moving on, I'm not gonna focus on upper targets, all-time high levels. I mean, there are a lot of targets that we can consider based upon the price action that we have. You know, 30K, 40K, 50K, whatever. And there are a lot of people out there that have focused their analysis on that. But that concerns, in my opinion, this concerns mostly the investors who have accumulated maybe here, probably here. That is their concern. My concern is how is price gonna get there? What is going to occur during this correction? Where is price gonna stop? Where is it likely to find support so that I can seek long exposure in the market? So with that, I will be closing this chart and moving on to the Meso timeframes. Okay, so this is my Meso chart where I focus primarily on the 4-hour and the 6-hour. And first of all, I would like to focus on this part here. because it is a very important zone for the market, obviously. um, Starting from this correction, um, and as we established um, a while back, price tends to revisit consolidation zones, market acceptance zones. So that's why first I would like to cover this bit. And as you can see, I just put in the visible range on the volume. And as you can see, considering the candles that we have currently on the graph, this is the point of control. Um, so yeah, let's dig into it a little bit. I will open the 4-hour chart. So after it blown past the 6K level, which a lot of people, including me, thought that price gonna find resistance, retest low levels, and then continue up. It just stutters a bit here and just continues on. And price stops at first at 8.3. This level aligns with the top that we have. So again, uh, could and it did act as resistance as price corrected. But again, it corrected with a higher low, so it still held the trend. Let's say. Then again, test this level again, then pulls back for another high low. So basically here we have resistance. Where there are wicks, there's liquidity. And this move over here takes advantage of this liquidity that is here, because people who shorted this level, maybe here, maybe even here on the third. So this stop loss order on a short position is a buy order. And when you see an impulsive move like that through resistance, this essentially triggers those stop orders, and price continues up with ease. And as you can see, this the volume here was declining until this point, and then the volume starts to kick in as there is a lot of liquidity above this level. So you have the big players who maybe big players that try to push the price up, um, and then you have the stop loss orders of the bears, of the shorters, and that creates this volume spike after this resistance. And then price discovers another level at almost 9K. And this formation here is very very interesting. This I remember that I took a short position here. And I'll touch base on that. But first, I would like to mention the following: that, as I mentioned, this is a resistance on its way up, and then it's broken with confidence, closing above with rising volume. So we expect price to react if it if there is a move to the downside after resistance is broken. It is only logical to think that this zone here, will act as support on the way down, and that is exactly what we get. But first, I would like to point out that right over here we have the so-called swing failure pattern, where we have a high, in this case a high at 18,953, and then we have an overthrow above this level, but not a close above it. weeks through. And again, talking about engineering liquidity levels, the the people that were seeking a short position in this zone, basically, for whatever reason, they have their stop loss above that. And as we established, the stop loss order of a short position is a buy order. So the market maker pushes the price up, triggers those stop losses, which is essentially short liquidity. Big players need this liquidity to fill their big positions, so they take advantage of this stuff, so they get filled here, basically. Maybe even lower, but it doesn't matter. The point is that this was an engineered liquidity level. They took advantage and they pushed the price down. So all those people that shorted here in this zone, and most of them probably got stopped out because they had their buy order above this level. So price continues down and finds support, a logical spot where it was a resistance. And again, we see the volume spike here because of this phenomenon that I mentioned. So price afterwards retests this level and then prints another higher low, considering the lows over here. Prints another higher low, consolidates a bit before the final parabolic move to the upside. And after its consolidation, it stutters a bit here for a lot of reasons. On the top of my head, the liquidity levels that we mentioned on the macro outlook, for example. But obviously, this is a very important spot because on its way down, price finds support here. And it's only logical to think that because after we've blown past that and we find resistance at let's call it 14K on Binance, it hit 14K, I believe. After we found resistance that we already proved that it's a significant resistance in the market, the first logical spot that you will be seeking support will be here. But this is a very fat zone between 7K and 9K. So you would say, yeah, price is likely to find support here, but where is it likely to find support first? And logically, the first spot to look will be here. And this is exactly what we get. Now, after the first push down, we see a retest, the first lower high. And as I mentioned in the macro outlook, this is the place where the long exposure is limited. And after it's pushed to 9K, let me zoom back to the 6 hour and dig in a little bit, and this zone, this consolidation zone. After this push to 9K where we found support, we again hit a liquidity level because on the way up here, price finds support, breaks through, finds support again, retests this level here, and then continues down. Finds support at the first touch, then retests this level that acted as support on the way up and at first on the way down. So basically here we have a support resistance flip. retests the zone, finds support at 9K, then goes back, tests this level again, forming a double top formation, but essentially this is not a double top because this top is part of this move. So it may look like a double top, but it's not. I mean, it's just a stiff resistance that was a support that was flipped to resistance, and it failed to get there, and then tests 9K day, failing to close lower than the first push, as you can see, slightly above, $30 above, and then price goes up, and being in a place where a lot of people were seeking long exposure, and price logically finds support at this level. At this point in time, there were not a lot of people that wanted to be sellers at this point. So price moves up with ease here because of that reason. When there are no people willing to sell, and when there is potential buying pressure, price moves up with ease. And here, again, we have another SFP, if you want to call it. I'll zoom in a little bit to show you. Because we have a low, as we established previously, the same thing, but in this case, it's on the way up. Let me fatten that up. So we have a low, we have a series of bullish candles printing here. And so you have a lot of people that, you have people, maybe not a lot of people, but you have people who enter the long position here. And these people, the logical spot where they will be seeking to close their position in fear of a loss, they will be putting their stop loss below this level, below 9.3K. So again, big players are taking advantage of that, knowing that there is liquidity below this zone. And those stop loss orders are essentially of a long position. Those orders are sell orders, and those orders provide liquidity to the big players, because in order for them to open their long position, they need somebody to sell to them. So they take advantage of that, push the price down below this level, fill in their long position, and price essentially moves up. So again, we have the swing failure pattern that we talked about here. There is not a lot of price action between this point and where the liquidity tap at 9K occurred, but nevertheless, it played out perfectly. And price finds resistance, fails to make a higher high than this point. So again, we have a high, we have a lower high, then we have another lower high here. And this is another point where we have a liquidity tap on this candle here. And those points on the graph, I mark them with an X, indicating that on the time frame that I was looking at, there is no close of the candle at that point. So here we have essentially the same thing. Yeah, price moves up here, consolidates a bit, and then continues down. And obviously, as you can see, I've marked these highs here that are part of the corrections. And this level here, let's call it 11K, which is very significant. Which is, to be perfectly honest, on the way down, I was reloading shorts. Yeah, I was getting more exposed. But this liquidity zone very important to the market. So if, for example, you miss to enter a short position here, you have a drop, you have a retest, liquidity level as we established, you can short again, pretty nice percentage gain. So essentially, this is not a lower high on the bigger time frames, because this high is part of this entire move down. So essentially, the next lower high is here. Oops, sorry. Next lower, the last lower high is here. Yeah, and this zone right over here as well, essentially the same thing as the old one right over here, where there is market acceptance, price respects this level as support on the way down. You know, here, here, here. A lot of touches, 1, 2, 3, 4, 5, 6, 7, 7 touches, and finally breaks down. So having lower highs, everyone would be tempted to pull a trend line indicating the resistance levels that we could expect. So essentially here we have a descending triangle playing out. Yeah, there was the possibility of it being symmetrical, considering that we have a couple of higher lows. So in that case, you will be drawing it up like that. And a symmetrical triangle in a bullish phase usually means upwards continuation. And that's what a lot of people were seeking. That confused a lot of the elite wave traders who they have their rule that there cannot be a triangle in the second. So this was essentially a fourth wave. It was a bummer for elite wave traders, but let's be honest, what's not a bummer there? I mean, whatever. So yeah, it was something that I considered at the time, but I was more inclined to believe that this was this descending triangle with the price was going to go down. And moving on to the current market structure that we have, as you pointed out earlier, after you saw this push up to 14K essentially, you would expect price to find support here for a lot of reasons. Not only the price action here, but the price action from 2018 as well. So yeah, these are logical targets that could have been easily anticipated after 9.1K broke. I mean, you have this level, this zone here, that was obviously respected, which we already established as a liquidity level on the way up. So basically, we see a touch of the monthly and the weekly pivot, which lies, both pivots lie at the same price point, 8.1K. So we see price here hitting that level, bounced a bit, then continued down to form the low. And yeah, this low doesn't comply with any particular point here. But as I said, we tend to look for support at this big zone. So what are my expectations right now? As you see, I have a couple of levels here that I've put a square on, just to emphasize on upper targets that I see. Just one moment. it's very interesting to see how price develops from now on, because there are a lot of things to consider. Uh, and I will start with this. I mean, when you have a formation, any formation, in this case we have a descending triangle. We have a descending triangle that is playing out with expanding volume. Yeah, this is one thing I forgot to mention, that a pattern, when you want to play out a pattern, um, you seek declining volume, and this is exactly what we get here. After the sell-off, after the high, we essentially have a declining volume. You can see the line over here, how it's just dropping down, moving average. And then when price finally breaks down, it breaks down with conviction, with rising volume, because there's a lot of liquidity. I mean, there are a lot of stops below this level that fuel in the not downward momentum. But what I wanted to point out is that when we have a triangle formation, a descending triangle formation in this particular case, you would expect the first thing you do is, when you want to play out a pattern, is to do a measured move from high to the low, and then you copy that and you paste it below the support. Yeah, okay. This is one thing we can do, but what I want to emphasize on is that you have a couple of ways that this can play out. After it breaks down, the first option would be to retest the support. In our case, this would be 9.1K, and then continue down for a lower low. This is one option. The other option would be, so we have a low here, then price meets its resistance that was previously a support, consolidates, and it moves back into the range. So in that case, you have a failed trust downwards, and essentially this is what we call a fake out, meaning that this was just a shakeout, essentially a bear trap, and price will continue up, for example. Yeah, so this is what I wanted to emphasize on. And there is, of course, the third option where price doesn't visit the support, which I don't think that we'll get, honestly, but prints a lower high and then continues downwards. This is the third option. Okay, so with that established, let's go back to the chart. And what are my expectations right now? I had this on Monday. We had the new pivot points. In this case, on the 4 hour, the 6 hour, even on the 1 hour, they are the same. But yeah, essentially, I was expecting a move to the Meso pivot, and this is exactly what we had. And again, we have the daily pivot sitting right over here, which aligns with a lot of stuff. Of course, the support that we had at 9.1, which will be one of the scenarios I mentioned where price retests the previous support and then continues down. One of the scenarios I mentioned, and that also aligns not only with the daily pivot and the support, which are quite significant, but with a 50 level. sorry, let me put that in black so that you can clearly see it. So yeah, as you can see, 9.1 aligns with the 0.5 retracement from up. So yeah, this is why I have these two boxes here sitting and waiting to see what the reaction would be. And if I'm looking at lower targets, I'm considering this entire box right over here, of course, but primarily I believe that we will see a significant reaction between 7.5 and 7.2. And of course, I'll try and explain why. First of all, we have market structure here. That's why I put this line, the black dotted line. We have the daily S2 pivot sitting here. Let me zoom out to the daily just to show you. You have the daily S2 pivot, and you're getting close to a bull's buy zone, which is essentially the 618 and the 6.5. This is a fib retracement that I pulled from the bottom to the top, and I only left out these two levels because at this point in time I do not care a lot about the other levels. Not that I particularly care about any fibs, but I pay attention to them because a lot of people do, and it's just another tool to add confluence to the thinking. So to repeat, we have so price on the daily fails to close. Actually, I just noticed this, that on the daily, price didn't manage to close below the monthly pivot at 8.1. And obviously we see a reaction, a very slight one with a very low volume, essentially, considering the volume on the way down. So we have the structure, we have the daily S2 pivot, we have the golden zone approaching, we have, actually, I'm sorry, this is not the daily S2 level. The daily S2 level is down here. Some other stuff that I had on my chart, maybe the previous week, pivot was there. Let me check. Yeah. The daily S2 pivot from previous week was here. That's why I had it with. I had a horizontal line sitting there. So yeah. Another thing that I'm considering as well is this trend line, which is, I mean, we'll see that if it's significant, we only have 2 touches on it. But I have it on here because I had all of them, basically, from this one, for example. That one broke, retested it, and continued down, which was another thing that to add to the SFP that we had here to enter a short position. And afterwards, we had another trend line from here. We broke that as well. We had one more over here that was broken again. And essentially, this is the last one. And we all have 2 touches, so it's not that significant at this point in time, but it could act as support. And as you can see, it aligns with 618 retracement level. Basically, this zone right over here. As you see, this aligns with this wick here, the support here. Another thing that we have here is the weekly cloud, Ichimoku cloud. Let me show you. So right now, as you can see, that's why I have this curve here, just to mark where it is. So essentially, it's staying within the cloud, and this being the edge of the cloud, it's only logical to think that it will act as support. Let me remove that. Oops. You can see the settings that I have. A bro of mine shared those because their default settings are not applicable to the crypto market. So zooming back out. So yeah, a lot of stuff align here. A lot of stuff align here where price is likely to find support. And one more thing I just remembered. Let me just find the chart. Sorry, guys. And this is the micro outlook that I will touch base on um, in a minute or two. Just give me a moment. So another thing that adds confluence to this entire zone here. Oops, is the fib channel, and more importantly, so here I have only the fib retracement to from bottom to top, uh, and you see the golden zone here, and essentially we have a crossover of the golden zone of the fib channel and the golden zone retracement. So yeah, this this is quite interesting. I mean, we respected him once, as you can see, failing to close below 8.1, where is the monthly pivot. Uh, but yeah, we wicked in this golden zone, and now we're in the process of correcting this move as an internal retracement. So yeah, this is a very interesting zone that I highly expect to to be a reaction, maybe a reversal, maybe a temporary support. Who knows? We'll see. But yeah, uh, with that established, I would like to continue on to the micro outlook, for which I have a separate chart. And here I monitor Bitfinex and Binance because I trade on both. And this entire zone is developing quite nicely. Uh, One thing I really don't like about it is the lack of volume after the initial push down, which makes me think that the big players did what they did, and now price is consolidating, failing with without an uptrust, a convincing uptrust, uh, on the move up with very low volume. So that makes me think that this is a temporary support, um, temporary consolidation, sorry, before continuation downwards. Since you have the same zone here marked off, just to know where I'm at when I'm looking at the micro time frames. It's quite difficult. It's quite difficult to stay consistent, and that's why the important levels that I consider I have them marked on all my charts, not to lose track. Because I usually trade. I have trades. I have macro trades. I have meso trades, and I have micro trades. Separate accounts for all of them. And right here, uh, we again have the support resistance flip that I mentioned a couple of times already during this zone, where we had the initial drop to the monthly pivot at 8.1, So you have the level mark. Then we have profit taking here. Then we find support, failed to make a high, and continuation down. So we have a support. Now that support, after we have a low, that support turns into resistance. And as you can see, you have the first, the second, and the third touch, and then on the fourth attempt, it breaks out. So I just thought of something. It's very important when you have a support, when you have a significant level in the market. In this case, we're looking at the macro, so it's a very small level. Between 8,250 and 8,300. So it's an observation of mine would be that if there is a significant level, it doesn't matter the time frame. When we have three touches, we have to closely monitor the fourth attempt to break this level. I mean, when you have these many touches on a significant level in the market, and again, I'm not talking about this level on the micro time frame in particular, I'm talking about in general. You have the more touches you get, the weaker this support or resistance gets, and that's exactly what we see. And what we have here is another liquidity tap that occurred. I mean, it's not very visible on this time frame, but I believe it's, yeah, on the 4-hour. We again have the swing failure pattern here with a overthrow below the low, and again, big players, maybe big players. I'm not sure those are big players because low volume is very low in this range in particular. Just see if I'm still recording. So yeah, essentially we had another liquidity tap and then price moves up. So just to remind once again, here we have people that accumulated longs in this zone here. They have their stop losses, meaning sell orders below the low of 7.8K. And that liquidity is liquidity that fuels the longs. And price moves up. Zooming out to the 1-hour, after making that point, we see price closes above it on the 1-hour, consolidates a bit around the resistance, and then closes above. And now we are again visiting this zone. There are many scenarios that we can consider in this case. And maybe I have this box mark because it's considering the possibility of price revisiting this trend line, retesting the trend line, and then continue up, maybe? Who knows? This is the Meso pivot that I mentioned that I have marked on this chart, and the daily pivot as well on this chart. So essentially we have a couple of possibilities. Now price is consolidating around potential support, maybe. Let's fatten this up a bit. This market acceptance level. It's quite interesting that we have the point of control here. That's usually a sign of to consider that price is likely continuing downwards. And we see the point of control here because we have a lot of price action in this zone in general. So the highest volume spike is here. So pay attention to this level here if you manage to go back and grind above it. So here you have a couple of possibilities. So you have a trend line that was broken through, retest here a bit, and then continuation. So logically, you would expect for price to retest the trend line before continuation upwards, maybe here, to the meso pivot that I mentioned, or maybe to test the previous support at 9K. Who knows? And this trend line where it's currently sitting aligns with the 50 and the 618 levels, as you can see here. So yeah, a trader could seek a potential long position here with a very nice risk to reward. Let's say you start at the 50 and you have a base of 1.9K, you put your stop loss order below the 65 and you're aiming for the meso pivot. So that essentially gives you a trade with a risk to reward of 5 to 1, which is quite good, I would say. And with that, I think I will conclude my analysis here. Overall, I believe the entire correction will take some time. So, in my opinion, patience in this game is a key ingredient to success. So wait for the trade to come to you guys. I mean, don't FOMO in, don't think that you're missing something out. There are a lot of ways that this can play out, as I pointed out, going through the price action. So don't FOMO. And one more thing, don't try and be the hero that buys the absolute low and tries to catch the absolute low so that you have the and I put that in brackets, the perfect entry. So you feel comfortable with the position, price moves up, you're in profit, whatever. But it's not, in my opinion, it's not important to catch the absolute low, whereas it's more important to get in on a good trade. So as we established here, we have a low and we have price moving up slightly with very low volume considering the prior price movement. And one more thing, the first counter trend move is rarely the origin of a reversal. So, and even if it is, even if we do this where price test the pivot, I mean touches the pivot, because now we have not touched it yet, and I have it below as well because of the liquidity level, because of the liquidity that we have on during the price movement toward the downside. I mean here, this zone here. This is what I'm considering stiff resistance. As you can see, we have the double top formation here playing out exactly to the tick. If you take a measured move, when you have a double top, you would be expecting price to hit here. So even if price moves to the meso pivot and then continues down, and let's say if this is the pivot where we find support and we try and seek and we seek price discovery above 14K essentially, and afterwards toward all-time high, etc. This is not going to happen in 1 minute, in 1 hour, in 1 day. This will take time. So that means if this is the low, we will find resistance more likely here, then we will print a high low, and then we will close above this zone. So this is your buy zone. If this is the pivot, just long the first lower high. I mean, why do you have to be the hero? Let the others make the first move. Let the algorithms kick in, And the people that would like to catch the absolute ball, let them make the first move and just long the first retracement. And just one more thing I would like to show and not go through it at all. I mean, I have an Elliott wave count. I have had the same thing during the triangle formation, and I'm currently updating it. So we have a double XY correction, so a triple combo, A, B, C, A, B, C, A, B, C, and we're currently seeking the C. And we already had the B wave. 1, 2, 3, we're currently seeking the fourth. And as I mentioned, it could be here at the 382 level, maybe at the 50, which is the meso pivot before continuation downwards. And the target is at the Gondo zone, which aligns with other stuff that I already mentioned. And with that, I wish you a good day. Thank you for tuning in. And if there are any questions, feel free to reach me in Twitter at robo_copo, COPO, or on Telegram with the same handle. Thank you very much. Have a good day.